The rise of yoga pants, whether you actually do yoga, like yoga, or just want to fit in, has not gone unnoticed. And the company that definitely benefits from that is called Lululemon. Now, we always talk about tech and software companies on this channel, but I do think that Lululemon should be on your watch list right now and try and make the case throughout this video. First of all, just want to thank the newest supporter of this channel, Alisa B. Thank you for deciding to support the channel. So, currently, this is the state of Lululemon. They recently reported their earnings report. Not the best of the numbers. Valuation was already quite high, so the stock took a hit. Right now, we're at a market cap of $49 billion. One share will cost you right now $392 per share. It has a forward P of 27.4 times. Compared to its 5-year mean, it is much lower. And as you can see on all of those metrics here, EV to EBITDA, price to sales, price to free cash flow, and even the PEG ratio, we're now close or at the level we were back in March of 2020. And of course, since then the company has become quite better. And so, in my opinion, this is already point one of this being quite a good company to have on your watch list, or maybe even add to your already existing position. Now, of course, since 2020, the stock has gone up quite a lot, but as you've seen, valuation-wise, we're back at the same level since then. That's because the business has done tremendously well in the last couple of years. If you look at what the analysts are expecting for the coming fiscal years, top and bottom line, over 10% growth year over year. And if we look at the average price target from the 36 analysts covering this stock, it now sits at $482, representing close to 24% growth from the price we're at today. Now, I'm going to go over a couple of numbers that were interesting in the earnings report and then talk about some stuff that were mentioned in the earnings call, which is always a bit more interesting in my opinion. But before doing so, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description, any other pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So first of all, I want to show you the gross profit, gross margin, income from operation. This is truly remarkable for a company that sells clothing, right? So gross profit increased 25% to $1.9 billion. Gross margin increased 430 basis points to 59.4%. Adjusted gross margin increased 200 basis points to 59.4%. Income from operations increased 191% to $913.9 million. Operating margin increased 28.5% from just 11.3% same quarter last year. Truly a remarkable company, and this really shows their strength. They are a company that is not about selling you cheap stuff that gets replaced every couple of weeks. No, you're paying a premium, but you're paying a premium for a quality product, and they've got pricing power. They don't really play around with regards to having huge sales, stuff like that. No, they know what they offer, they know their clientele, and so that's why you're seeing these types of margins. During the quarter, the company opened 25 net new company-operated stores, ending with 711 stores total. Now switching to the earnings call, so first of all, they mentioned here again, they remain ahead of their Power of 3x2 goals, which, if you don't know what that means, like myself, they explained it here back in 2022. So it's a growth strategy to 2026, include plans to double men's, double digital, and quadruple international revenues while continuing to grow core areas of the business. So in the fourth quarter, total revenue increased 16% by region. The Americas increased 9%, China mainland increased 78%, and the rest of the world increased 36%. By merchandise category, women's increased 13%, men by 15%, and accessories by 40%. They say here with regards to their membership program, the Essential Membership Program in North America has now grown to more than 17 million members in the first year. They remain excited about the membership program as it offers us new ways to engage with our guests and increase both spend and LTV. They say here that they experience strength across all of their international markets in Q4 and they expect business to remain robust in 2024. International, which includes our China mainland and the rest of the world segments, continues to be underpenetrated and represents only 21% of their business. Over the long run, they expect international to represent approximately half of their overall revenue, so still a long way to go. Then with regards to inventory levels that declined 9% versus last year, Then as for the full year 2024 guidance, was also big weak-ish. So they expect revenue to be in the range of $10.7 to $10.8 billion, representing growth of 11 to 12% relative to 2023. They expect to open 35 to 40 net new company-operated stores in 2024 and complete approximately 40 co-located optimization. This will contribute to overall square footage growth in the low double digits. Our new store openings in 2024 will include 5 to 10 stores in the Americas, with the rest in our international markets, primarily in China mainland. For the full year, we forecast gross margin to be approximately flat with adjusted gross margin in 2023. So what you're seeing here is a company operating close to perfection. Yes, the quarter and guidance right now, although we've seen that already with a couple of other companies, it's the start of the year, a bit of uncertainty, so they put the bar low and see where they can beat further down the line. Remains to be seen what happens here with Lululemon, but considering their track record, I think it's safe to say that, well, they're going to beat along the way and raise accordingly. Now, what you're getting here is pretty simple. It's a brand that represents quality, premium. Yes, it's, let's say, a niche-ish product, but it is growing. It's not just for women anymore, it's for men as well. It's not just yoga pants, they do other stuff as well, as you can see here on the screen. Even shoes, which are becoming quite popular, especially for the men. And like they said, internationally, still underpenetrated. There is still quite a lot of growth there. So in my opinion, even at $49 billion in market cap, doesn't really matter. If you look at market cap, you have to look at the growth rate, you have to look at valuation, you have to look at the roadmap. In my opinion, we're still far away from them reaching the end point. Now, of course, remains to be seen whether or not this is the type of company you want in your portfolio and whether or not you want to add or not add to your position. Currently, this is what we're looking at with regards to the stock. This is the graph right now. After the earnings report, stock crashed under the 20, 50, and the 200-day moving average. Right now, we are sitting at $390 or so, which was previously a top-ish bet in April 2022, November 2022, May 2023, and September 2023. Maybe this time it will serve as a sort of support line. RSI on the weekly is pretty low, but not oversold just yet. But if we switch to the daily, on the daily, RSI is oversold. Now, I do want to show you one thing, is that back in May of 2023, we had that huge jump after the earnings report. So there is still that gap here at around $340 or so. Again, not all gaps get filled, but most of them do. If it does drop lower, well, this is an area to keep an eye on. So overall, that will be it for this video. Right now, for me, it sits on the watch list. It's a very, very interesting company to look at and definitely gets you exposure to, well, the consumer side of the business, the clothing area of investment, not just software, big tech and stuff like that. So certainly something that I'm interested in. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I see you all in the next one. Bye-bye.